Over the last 20 years, the Indian automotive market has grown from about 500,000 new passenger cars, hatchbacks, sedans, and utilities to about 3.5 million in 2018. The market has an expected compound annual growth rate of about 5 to 6% over the next 10 years. But some automakers have struggled to make it work. Among them is General Motors, the largest U.S. car company. GM stopped selling cars in India in 2017 after years of declining market share. It's a striking move for GM, which in recent years has also closed shop in other regions around the world, as leadership focuses on maximizing profits and making investments in new technologies such as electric powertrains and mobility services. With a population of more than 1 billion people, India is becoming one of the world's largest automotive markets. The country is poised to surpass Japan as the world's third biggest new car market in 2021. So while there is ample opportunity for automakers, the Indian landscape has been particularly difficult to navigate, especially for American firms. GM watched its share of the Indian market erode steadily over several years, bottoming out at about 1% in 2016, just before the automaker pulled out. So if the Indian market is growing, why did GM struggle, especially when GM has been so successful in China? To be fair, quite a few automakers tend to have difficulty in the Indian market. First of all, India is a massive country with a diverse population of roughly 1.3 billion people.
India, I think we are definitely a complex market. The income levels are quite heterogeneous. We are divided actually into urban India and rural India. The consumer requirements are actually different. Even the needs are different in both these markets.
There are a few criteria a mass market automaker ought to meet. They are fuel efficiency, resale value, proximity of service stations, and the affordability of parts and low servicing costs.
I think first thing is price. We are a country with a very low per capita income. Indians are very price sensitive. But price is not the only factor. So now the customer also needs some more value, for example, styling elements. And then I think a consumer also wants a global brand. They want a brand which is aspirational. The consumer wants an overall combination of all P's. It may be product, it may be price, it may be positioning, which makes the things quite complicated for OEMs.
These might seem pretty attainable, but many automakers have struggled to meet these in the country. There are a couple of companies who have managed to crack that code, and there are several more with shares of the market ranging in size from small to smaller. By far, the most successful automaker in India is the Japanese firm Suzuki, which alone owns half the Indian market. Suzuki has enjoyed something of a first-mover advantage. It was the first major automaker to enter India, and it did so through a joint venture with Indian manufacturer Maruti. Suzuki also specializes in highly fuel-efficient vehicles, which are extremely important in the Indian market. After Suzuki, Korean maker Hyundai is the second largest, with 16% of the Indian market. After that, Indian, Japanese, and Korean makers such as Honda, Tata, Kia, and Mahindra all more or less have equal degrees of market share. Kia in particular is a relatively late-coming brand that has been able to succeed in India.
I think an excellent example is Kia Motors, which recently entered. It was a new brand and they gave a great proposition. They were in SUV segment, and I think suddenly right from the month one, we saw a great success for this OEM in India.
Then the remaining 10% of the market is made up of others such as Ford, Renault, BMW, and Nissan. Early on, GM entered the India market with its Opel brand, a mass-market brand GM had owned in Europe. While Opel cars tended to be affordable, they failed to resonate with Indian buyers.
I think later on they realized that's not a brand which is really going to work well in India, because that was not a value proposition which they were offering to the customers.
But then GM introduced its Chevrolet brand to the country, which brought it more success.
It was a great success. They launched few great products like Chevrolet Cruze, Chevrolet Beat. They have that start which they were really looking for.
Despite these efforts, the automaker had trouble taking share in the Indian market. It was the first automaker to introduce a diesel fuel-powered car of its size. At the time, the Chevrolet Beat was the smallest diesel-powered car customers could buy in India. It was a strong proposition and benefited from a government subsidy on diesel engines. But in the end, the diesel Beat had few takers. The company may also have made a misstep by trying to introduce a low-cost vehicle GM manufactured with its Chinese partner SAIC, called the Chevrolet Sail.
Their plan got derailed, with the introduction of Sail, because I think they underestimated the consumer aspiration, and then I think the decline started.
GM also fell victim to a kind of self-reinforcing cycle. One challenge it struggled with was the lack of an adequate dealer and servicing network. More premium brands, such as Mercedes and BMW, often attract customers with the means to travel further for service and sales. But mass-market brands such as GM's Chevrolet are targeting middle-class buyers who value convenience. Dealerships in India often sell a single brand, so GM's low sales volumes meant a single dealer might sell only a handful of cars in a month and risk taking losses on the costs of running the business. In the end, such low market share made it difficult for GM to justify maintaining a presence in the country, and the automaker officially stopped selling cars in India on December 31, 2017. GM told CNBC it explored many options for its India business, but ultimately withdrew after it determined the increased investment originally planned for the country would not deliver the returns of other global opportunities. It continues to operate services for existing Chevrolet customers in the country. In September, the automaker entered a long-term partnership with Tata Consultancy Services, which will do engineering design for GM vehicles meant for markets around the world. The move out of India was part of a larger pullback GM has been making around the world as it restructures its business.
We're seeing other automakers follow suit as they're pruning. They're pruning the dead branches and focusing on where they can be strong. For GM, this is a huge shift because GM of old used to be all things to everyone, everywhere. And it is now decided that is not the proper strategy.
The automaker told CNBC if it doesn't see a clear path to leadership and long-term sustained profits in a particular market, it will look at opportunities to focus its resources on areas that will lead to the greatest results. It added that this is the same approach it has taken elsewhere. The automaker also sold its European operations to French carmaker PSA in 2017. At the time it pulled out of India, GM had two factories there, one in the Gujarati city of Halol and another in Talegaon. The Halol plant was acquired by MG Motor, the once famed British brand now owned by Chinese automaker SAIC Motor Corporation. GM has a joint venture with SAIC to produce cars in China. Reports surfaced in November 2019 that SAIC is also in talks to acquire GM's Talegaon plant along with fellow Chinese automaker Great Wall. GM told CNBC it is exploring strategic options for the plant. The move out of India was a retreat for GM and for American auto industry.
Ford is starting to do the same. It's trimming some of its offerings. Global economy and global auto market is slowing some. Certainly true here in the US. It's true in China. There's just not enough money to go around to every single market, to every single vehicle line. Look at Daimler and BMW. They've announced major employee cuts.
But in some ways, it might have been a shrewd move.
The other thing that is happening in the market that has never happened before is we are on the verge of massive disruption of the industry. We're going to have a future of electric vehicles and autonomous vehicles and new ways to acquire personal transportation and mobility services and all kinds of things. Nobody knows when that's going to happen or how it's going to happen, but it's requiring a lot of investment. Companies like GM just can't keep putting a ton of money into the future as well as a ton of money in today's stuff.
While analysts do expect the Indian automotive market to continue growing in the foreseeable future, it did hit a slump in 2019. Maruti Suzuki sales were growing until February 2019, but have slipped every month year over year until October. Suzuki said in November that the slowing Indian market was one of the factors behind the company's falling overall sales and net income in its second fiscal quarter.
So I think right now the market is going through turmoil. Our economy is struggling, and if we really talk about the automotive market, we are talking about a decline of minus 14% in 2019 calendar year light vehicles. So obviously, this year is the kind of degrowth happening which has not happened in last 2 decades in India. 2020, we are just talking about a kind of a flat growth. But then going forward in 2021, 22, 23, the assumption that our economy should be back, the GDP growth rate will start growing above 7%.
Indian automotive analysts note the country's auto industry has to contend with the relatively recent rise of mobility services, such as ride-hailing. The potential of these competing technologies is still unknown, but could affect how interested in car ownership Indians remain in the future. In the end, GM did make some of the right choices when trying to go into India.
GM was right in terms of localizing their products, typically for the Indian market, making it in line with the taxation because they were able to save tax. But at the end of the day, they were really not able to match with what the competitors were offering.
If the Indian economy picks back up, GM may find itself trying to profitably re-enter the country. GM's rival Ford, which has been in India since 1995, said in October 2019 it will create a new joint venture with Indian manufacturer Mahindra, which Ford said will help it develop new products faster and drive profitable growth.